Hi there, Pete at eMiniVolume here. Just wanted to make a little video about today's price action. So what we have is we have an open drive off the open. Not a lot of volume associated with it. The first few bars, as we can see, there is. But then after that, it starts to taper down. Now what we also have, I guess I should tell you what I have on the chart. On my charts, I have the developing VPOC, which is cyan colored. I have the developing VWAP. I have the IB high, the IB low, the zones, obviously. And I have some candles. These are 2-minute bars with a volume component in them that helps me read volume, such as these. You have magenta, you have cyan, and different shades of those bars. So, off the open, we do get a push-up. We get a quick pullback into developing VPOC and VWAP. Then we have another push-up. Now here's where the important part comes in. Now you can see this wide range bar. It does have volume associated with it if we look down. Now what's important is the next volume is also, or next bar is also high volume, but this bar, after a breakout like this, we do expect follow-through. This bar did not get the follow-through. It got high volume, and it is a spinning top with a tail larger than its wick. Just some of my
Small skew
vernacular, I use the bottom shadows, I call them tails. The top shadows, I call them wicks, just to make it easy. So what did we have here? We had a breakout. Now, this is important. We have some folks thinking this is just going to rip up. A lot of folks came in today kind of bullish. I don't know why, but they did. So now we have traders wanting to get long. So now the anxious traders got in here. They just were so afraid of missing the move, they hit the market button and just got in. The more patient traders came back and waited for the mid up to the 2/3 or the 1/3 pullback of this wide range high volume bar. So they got in, they immediately got in trouble on the next bar. So the patient traders, which are typically the more disciplined, realized that this trade was in trouble. So what did they do? We can see it in the price action here. They got out of their trade, either a scratch or a small loss, while the traders up here just sat and watched and hoped for another pop. So on this bar, everybody
small skew
who bought this area had to be out. If you weren't, well, I don't know what to say. So we come back down. Now we have a developing VPOC shift up. So now we have what I call a peak volume price area. This is now this area in here. So you could expand it up into here if you so desire, but I don't. I kept mine in here, in this area. That's what I would consider the peak volume price. So this is the area that I tweeted. I'm looking for a nice scary pop to short into, and what was the level I was looking at to short into? Well, we let price action define that level. Here. This is the current over-under, where the patient traders that bought this knew they were wrong. They got out. And so this was the level of control for the current time. Now we also have another level of control, and that's this area down here, the high volume price area. So looking for a nice scary pop to short into, this was it. This was it. Clearly identifiable risk. All you just didn't want it above this area right here. That wasn't that hard. So now we have to, now that we've identified our stop area, now we have to identify what makes this trade right or wrong. And it's the developing VPOC. What we want to see is we want to see the developing VPOC break, and ideally the entire high volume zone, the peak volume zone price area break. The reason being, if buyers would have come off, stepped in at developing VPOC, and drove the price higher, then we would have known our trade was wrong, and we would have to move on and wait for the next bus. Well, that didn't happen. What did happen is they tried to drive price up. They got low volume follow through with a wick larger than the body of this candle. Next, what happened is price came down, tested developing VPOC, allowed you to mitigate your risk, popped back up, could not retake this pivot high. Now we're starting to feel pretty good. Now all we need to do is break this area. We broke developing VPOC on a wide range bar. Not a lot of volume associated with it, but enough. But what's more importantly is after the break of the developing VPOC and in the peak volume zone price area, we have an inverted hammer. Sellers are definitely in control at this point. So they drove it down, gave us a nice little area to exit our trade. Now we wait for more information, because that's what we do. We read the price action, we connect the dots, we put all the pieces of the puzzle together. So let me expand this chart a little bit. Well, just move it up a little bit and bring us to where we were. Okay. So now what do we have? We have the buyers from the open here. We can see them in the price action. We can see them here.
Small skew.
Whoops, not a very good line. Let me try that again. Oh, jeez. Okay, well anyway, you get the picture. Now, if sellers were truly going to take control of the day, they want to break this. They want to take everybody out that bought the open expecting a big move up, take them out. And what did they do? They took them out. We did see a very small battle here. High volume, small range candle. But then what happened next? Game over. Sellers came in with high volume, wide range bar, broke the IB low. Now we're definitely expecting extension. So what do we get? We get a high volume bar with an equal tail, equal buying tail, equal wick. So now what do we expect? We expect a pullback. We're expecting a small retracement because of the battle that we just saw occur here. So now, what's the area where we can identify risk? Well, it's going to be the combination of the open and the combination of where the seller stepped in. So now we know our entry area. This would be the ideal entry. This is where sellers came in with force. The IB low would be the aggressive entry. So now we've identified our entry area. We've identified our risk. Now we need to identify what's our first target. Where's our risk? Where do we mitigate?
Volume breaking through 100% above its average.
Remember, I tweeted in this area, I asked if anybody thought I faded this zone long. No, I did not. Reason being, it's a minor zone. Sellers in control.
My trades
Bias
only.
is short.
Thoughtful, well-defined
So what am I looking
risk-reward
for?
trades.
I'm looking for another pop
Small
to short
skew.
into. So we got this here. We got the pop into our entry zone that we've clearly identified. We know our risk, and our risk, where we want to mitigate risk, is we want to see if this low right here, this zone, can break. And it did very convincingly on a wide range high volume bar. So what happened next? So let's draw some lines down here and look at the volume. There's the volume on that bar, and there's the volume on that bar. Remember the pattern at the top? We expect follow through, and the stronger the follow through, the better. So now we see this bar with a smaller range than this bar on higher volume. That's where we want to mitigate risk. Even if you wanted to wait and you saw this bar, this inverted hammer right here on high volume form, you could still be holding. And if you so desired, you could set a stop up there for one of your partial of your trade, and if it got back up there, you were still managed, you still took out some, and you had your stop up here, your entry in here, and you had no risk in the trade. Nothing to do except let it play. So what did we do? We came up. Now, this is where these sellers right here confirmed these sellers. Now we have confirmation that we have sellers active in the market. So what do? We let the trade go. So now there's nothing to do. Watch it come down. It does make a new low. However, high volume hammer with a little larger body than I'd like to see on a hammer, but that does give a sign for caution. So this was a very nice area to exit this trade when you saw this candle form, because it happened at the same area that this candle formed. So we know this is now a battle zone. This in here is a battle zone. So whether you exited the trade and were looking for a pop to steal a better entry, or you let the trade play out, that's entirely up to you. So let's go on with the price action. What happened? We have a low volume move up. We have a high volume bar with a buying tail larger than the body. But the overall candle isn't a wide range bar. It's not wide body and it's not wide range. So now we have a developing VPOC shift down. So now we're getting some very good information on the trade for the day. And now we're rotating around VPOC. VPOC shifts down again. We're getting low volume rotation. Nothing to do. Nothing to do. Now, if you want to watch how price reacts down into this low. So down into this low, if you held your trade, this was the target for the entry from here. Anywhere from here to here. This was the ideal target. So now what you want to do is you just want to watch price. So price comes up, low volume, all of a sudden we get a high volume, wide range bar that just rips through developing VPOC. Now, what do we expect on a move like this? We expect one of two things. Either immediate follow through or a retracement back to developing VPOC and a move higher. Well, did we get either? No, we did not. Instead, what we got is a move through VPOC down into it, and then a move up into developing VWAP. And what's this level again? That's right. That's the open of the day. That's where sellers first stepped in. This was a brilliant area to get short. Anywhere from this pivot high, anywhere up in there. Your target would be new lows and then monitor the action. So now what do we get? Once again, we want to keep our risk in mind. So now what's our risk? Well, developing VPOC shifted up, then it shifted down, so we are creating another volume zone here. So what did we see? we're watching this bar right here, right there. That's where the buyers came in and tried to change the direction of the market. So this, in my opinion, anywhere from here to the low of this zone would have been a great place to just mitigate your risk. So then what happened? We came down, we got another high volume bar right here, and let's look where this happened. Can you see that? That is definitely a battle zone. That is where we have sellers trying to extend the range and buyers trying to hold the range. Okay, let me expand the chart forward. And move it up. Okay, so now we have this level, we have this area marked right here. Whoops. The open was just below it. We have VWAP. We have another entry here. We have risk mitigation here. Now, price comes up. So now, what's our risk on the trade? Once again, it's going to be this area, this high volume zone area. Now we have a double distribution profile of sorts with the VPOC coming down. Price is below VPOC, developing VPOC, balances for a little bit, comes up developing VPOC, can't even close a candle above it. We have nothing but rejection in this high volume zone area. If you wanted to press the trade, this was the area. This was your sign. It was a huge clue that you had a beautiful trade on, so either sit back and relax or press it. So now we watch, and now what do we want to see? We want to see this battle zone broken. That would tell us that we have got a great trade. Not only new lows, but even extension lower is likely. So now what happens? Sellers come in again. Now look at this bar. Look at this bar right here. Wide range, high volume, and it just cracked this area. All these folks in here that were trying to get long and support the range, buy the dip, done. Done. Right there. Okay, so now we know we've got a good trade on our hands. There's no doubt about it. Let's move the chart up and see what we've got. We have, this is the bar that we were just talking about. Right here. Now we have a high volume spinning top with a wick larger than its tail. Small balance, but the important thing is, look where this balance is taking place. It's taking place in this zone, but it's also taking place below the low of that bar. And it's also taking place below the low of that previous balance zone we identified. Now what happens? Now you'll notice this candle is a little bit different color, and that signifies even higher volume. That was actually the second highest, I think the highest volume or the second highest volume bar of the day. Just took everybody out. Everybody that thought they missed this pivot low and bought it here, done. They're out and unhappy. Excuse me. So now, there is absolutely no reason to get out of your trade. You stay in this trade, you sit back, either you've pressed it or you're just happy holding it. One of the two, it doesn't matter. So now what does price do? Price comes down on nothing but high volume. High volume, high volume. We can see buyers trying here. I don't know why. I don't have a level there. I didn't see anything there. Given that price rarely stops in air. It likes to go from inflection point to inflection point. This would give me no concern at all. And then what happened? We were proven right. All these buyers here that are trying, done. They just got hammered. We come down into the next zone, which is the S3 primary target. Pardon me. Well, do you see any reason to get out of your trade? I can see a valid reason to take some off, but to completely exit, I'm not seeing it here. We have a small balance area where we can see buyers trying. We have sellers coming in, taking them out. We have volume coming in, but look at the volume down here. Compare this volume to this volume. It's lower. The buying volume on this candle is less than the buying volume on this candle. Now what happens on the next candle? Even lower volume. No reason for concern. Now, we get up into here, and this, we've already determined, this bar right here was the bar that took out these buyers. So now, this is our important level. Those buyers confirmed the buyers up above, which confirmed the buyers up above, and etc. Sellers are clearly in control. So now what do we want to see? Ideally, we'd like to see a little balance, which we saw here, and buyers try again, so sellers can just rinse and repeat and take them out again. And that's exactly what happened. They tried, they took them out, and we moved lower. So now, whoops. We come down, and this zone is the S3 extended target, as you can see in the chart. Now we can see that buyers are still trying. We still have dippers in the market for some reason. I don't know what they're looking at. Definitely not the same action I'm looking at. Then we can see just a high volume wave down, a low volume green candle, and takes them out again. So in my opinion, unless you're looking for just a complete crash, this 2592 area, whoops, didn't mean to do that. This 2592 area down to the 88.5 would have been a great place to just exit the trade and call it a day. 2592 is the MCB VPOC from March 2nd through March 4th. So that's what I was looking at for the day. I hope everyone traded well, and enjoy your weekend.